Dan Roberts, head of global fixed income at Mackay Shields, has a rich perspective on markets that comes from 25 years managing bond portfolios. His insight is also aided by work early in his career at the White House, with the President's Council of Economic Advisors and as Chief of Staff of the Joint Economic Committee. His long-time focus on finding alpha makes him a 2014 Money Master.
We think there are really three things that differentiate us. The first one is honesty. The next one is we dare to be different. And the third one is the importance that we put on teamwork. I think the most important of those is daring to be different. If you look at the investment side the same way as everybody else, you're going to be like everybody else, and your performance is going to be like everyone else. You have to be different. To be different involves taking risks. And you have to be willing to take risks. You have to have the conviction to take risks. And that's how I think you spot opportunities, is you look at things differently, and you're willing to take the risk and have the conviction to take those kinds of positions. For example, in 2010, when most people thought that we were going to be going into a double-dip recession, we did not. We thought Europe would finally make it through their difficulties, and that there wouldn't be major pain to take. We wouldn't go into a recession. So what we did is we continued with our risk positioning throughout 2010 and 2011. That's difficult to do when a lot of days you see your position going against you day after day after day. But if you really believe, if you have the conviction that your positions make sense and that the economic fundamentals haven't changed, then you do have the conviction to stay with your position. A different example, but actually an exact opposite example, happened in 2006. In 2006, instead of keeping risk on the portfolio, we were taking risk out of the portfolio. And that was difficult to do in 2006 because everything looked great. Everything looked rosy. And people couldn't understand, why are you de-risking your portfolio when everything looks great? And so for a year and a half, we watched the markets continue to do pretty well. It really wasn't until 2007, mid-2007, when we started to see the markets crack. So you need the conviction.